The Social Security Board of Trustees has just released their annual report detailing the financial status of U.S. Social Security and Medicare programs. Yahoo Finance senior columnist Kerry Hannon is here to break it down for us. Kerry, good to see you. It's actually good news for a change. Is that correct?
Well, let's say a little bit of good news.
Okay, we'll take it.
The recovery from the pandemic was more robust and faster and stronger than anticipated last year. So what that meant is that there were more people, working, the Social Security taxes were there. So that's good news. So in a sense, they were able to push back 1 year, the short fall that they anticipate coming in the surplus fund for Social Security. But both Social Security and Medicare face really significant long-term financing challenges. With the good news from last year being that, the disability insurance is still going to be there. They see no shortfall there whatsoever. But yes, we have these very serious implications ahead. So, what they're saying is the costs are going to continue to grow faster than the GDP through the mid-2030s. So in essence, we're just a little more than a decade away from the main trust fund being exhausted. So in essence, there's a little more time. We bought ourselves some time because the economy was a bit stronger. But the sound, it's very clear that policymakers have got to make some changes here. They need to act because it takes time for these things to roll out. So reforms need to be put into place. But the people who are so panicked that they're never going to get Social Security are mistaken. In fact, they will still receive Social Security, but we need to make some changes in order to have that surplus.
So, Kerry, that begs the question then, if we don't see changes, I guess then what happens after 2034, after we get to the 2030s? How worried should we potentially be?
Yeah, it's so difficult to know for sure. But the experts I talked to this afternoon were simply saying that, yes, in fact, we really have to get going on something. But the number that everyone throws out is that it'll be around 77% of what the current scheduled amount is. So it's not that it's going away completely. You're not going to get anything, but it will be reduced if something does not get done in order to kind of make some changes here. Because, with an aging population, this is something that is a very real fact that you cannot escape, that there aren't as many people that are going to be in the workplace in order to support that aging population.
All right, Kerry Hannon, thanks as always for hopping on here.